Hi guys, it's Krista again here. Um, got a new article for you to review, and just wanted to share something with you. I've been working very hard on a video for the last couple of days on kids that are making a lot of money on YouTube, and I have rendered it. And what's happening is I had filmed it in profile mode, and in the rendering process, it's like putting it's doing something weird. So I'm hoping I don't have to scrap the entire video because I put a lot of work into it. So I just wanted to vent my frustrations here with this process. It's a lot of hard work still, and I'm still learning. So anyways, that's that part. Let me focus on something more positive here, or more, I don't know if it's positive, but something that caught my interest. It's another article, and this one was in Seeking Alpha. I'm gonna just read a summary of it. It's a huge long article. It's actually an analysis. Um, Seeking Alpha is a really cool site. I really like it. It's got a lot of information on the markets and on certain companies, and it's got a variety of analysts that comment on stocks, and you can actually follow these analysts. So if you're interested in one, I have one, and I unfortunately can't remember his name, but there is one guy that does a lot of analysis on REITs, which are real estate investment trusts, and they are like stocks, but they're a little bit different. But they are traded on the stock exchange, so you can buy them. The thing that attracts me about REITs is it's like real estate, because you're buying a little piece of real estate, I guess, kind of like a stock, but it's a real estate. And, if you are into real estate, which a lot of people have made a lot of money doing real estate, but you have to be into the property management, you have to make sure that you're managing your properties and everything. Well, if you invest in a real estate investment trust, you don't have to worry about any of that. It's just like buying a stock. So the the people that manage the property are the ones that have to do all that stuff. You don't have anything to do except collect your money if it makes money, or worry about it losing money if it doesn't make money. So, anyways, this one actually is about a company that is, I feel, is very interesting to people that are in the horse industry or in the farming industry. And the name of the company is Tractor Supply. And I am a very loyal customer of Tractor Supply. I really like the store. We have one close to where I live. And excuse me, just try to. I know that looks kind of funny. Maybe I'll cut that out. And my nose scratching. But it's a kind of an interesting company because it's a public company and really doesn't have any direct competition in the public, in the from other public companies. There's Home Depot, there's even Walmart. They sell hardware and supplies, and some things like that, which Tractor Supply also has. But Tractor Supply also has horse feed, chicken feed, a feed for different types of animals. And in that space, as far as a publicly held company, there's not a lot of competition. There is competition. Unfortunately, I feel bad for this, but usually it's local feed stores that are just trying to, make it in the world, and Tractor Supply moves in, and unfortunately, they have economies of scale, and sometimes they really hurt the businesses of these local small business feed stores, which is pretty unfortunate. I know, because I do like to support small business, but also it's really nice to be able to have a big store like Tractor Supply that has really good prices and is a publicly held company, so you can actually buy stock in it. And so anyways, I wanted to go ahead and read this article here. Oh my, getting my hands in the way. I'm not going to read the whole thing. I'm just going to read the summary because it is a very long article. And the name of it is called Tractor Supply's Secret Sauce is to Go Where Other Retailers Don't. So just what I was mentioning before, they don't really have any direct competition with other publicly held companies. The date of the article is December 26, 2019. It's on Seeking Alpha. And it's by, this person did not use his name or her name. It's by Cashflow Capitalist. And summary. Tractor Supply Company has carved out a unique niche in the world of retail. Its largest customers are small farmers and ranchers and those who live a rural lifestyle. The company operates 1,800 stores nationwide and sees opportunities to open several hundred more. Same-store sales and number of customer transactions per store are strong. Tractor Supply Company's business model is by nature e-commerce resistant, but the company has also actively built out its own omni-channel platform. I give my best projection of 10-year yield on cost as well as estimated annual total returns going forward. Okay, and then the investment thesis summary. Just gonna, oh gosh, you know what? My hand is getting tired holding this camera here. Okay, I'll just read this part. And then my plan, I'm not going to read the whole article because it's very long, just this summary part. And then my plan is to go on the computer and show you, how I would decide whether or not I want to purchase this stock. I already like the company. I'm a customer. But just because you like the company of a stock, just because you like a company and you think it's a good company does not necessarily mean that you should buy the stock. There's a lot of things that go into evaluating a stock. And part of it is you want to make sure that you have a good return on your investment, obviously. But one thing about owning a company that you like I like Tractor Supply, is that you feel like you have a vested interest in the company because you're a customer and you are familiar with their product lines and you've been in the store. And one thing with one of my idols, I guess I would call him, as far as somebody that is an investor, his name is Warren Buffett. He's the owner of Berkshire Hathaway, or he's the founder of Berkshire Hathaway, and he has mentioned that you have to know the business that you're investing in. So I'm familiar with this business because I am a customer. I buy their products, and it's of interest to me. Anyways, let me go ahead and read the rest of this. My hand's getting tired. You know what, guys? I'm going to have to pause for a moment because my hand is getting really tired here holding my phone. So hold on and I will be right back. Okay, I am back. I'm hoping my arm holds up through the rest of my reading of this article. Well, I'm not going to read the whole article. Like I said, I'm just going to read the investment thesis summary. So here's the rest of this summary, and after this I will go ahead and get on the computer. I don't know if I'm going to actually do it today. I might do it later, but and tell you how I would evaluate this stock by looking at some of the fundamentals on the computer. Anyways, investment thesis summary. Tractor Supply Company markets itself as a rural lifestyle retailer, which is pretty much summed up in its signature slogan, for life out here. The company's stores are located in or near small towns and rural communities, and its products are geared towards small farmers and ranchers, outdoorsmen and outdoorswomen, sports enthusiasts, and pet owners. Herein lies the very simple secret sauce of TSC's success. It focuses on being the most dependable supplier of basic maintenance products to farm, ranch, and rural customers. This commitment is reflected in the fact that 47% of total revenue is derived from livestock and pet consumerables, followed by 22% from hardware, tools, and various truck products. While the major commercial farming and ranching operations have their own supply lines established, small farmers and ranchers and those who enjoy the country lifestyle have traditionally been underserved by corporate retailers. That is where TSC stepped in. Areas served only by mom and pop stores or small farm and ranch chains, if at all, have proven to be TSC's sweet spot, increasingly relying on it for their everyday needs. This has been proven to be an incredibly strong and recession-resistant business model, delivering consistent sales and profit growth over the last 2 decades and through economic downturns. Okay, indeed, TSC's concentration on an underserved customer base and intentional marketing towards them has served the company and its shareholders well. It doesn't try to appeal to everyone, but rather to kindle a strong loyalty among those to whom it does appeal. That is the company's secret sauce. Its competitive advantage, and it is the reason why TSC stock is worth owning at the right price for all kinds of investors. So basically, TSC is here to fill a niche, and that would be a competitive advantage, or what Warren Buffett would call a moat. So that is an interesting perspective, and again, I want to give credit where credit is due. Article was from Seeking Alpha on December 26, 2019, by Cashflow Capitalist, and I will put that information into the show notes down below, and you can take a look at it. And then I'm going to go now, part 2. Well, I'll put this together, but I am going to go and do my interpretation of whether or not this stock is a good buy. Hi everyone, it's Krystal again. I am in the Morningstar Site for Tractor Supply, and I'm going to go through my metrics one by one. This may take a while, so I may, depending on how long the footage is for this specific topic, I may end up making a 2-part video, and then because it'll be just really long. But I wanted to give you some of the ideas that I use to evaluate a stock. And I go through a series of metrics. And the first one, I will just let you know, it's my own kind of personal metric, because what I did is in my video, I think my first video, which I will link a card to this video for the first one I told you about, the BogleHeads site, and Jack Bogle, who invented the Vanguard funds. So regarding the Vanguard funds, these are funds, index funds, that have an expense ratio. So stocks don't have an expense ratio, but ETFs and mutual funds have expense ratios, which is kind of a management fee attached to either the ETF or the mutual fund. So just keep in mind that that expense ratio eats into your profits a bit. But what I wanted to do is I wanted to compare the stock price over time for Tractor Supply against the against an ETF that matches the S&P 500, and the S&P 500 is the market capitalization weighted index of the 500 largest publicly traded companies. And so for this case, I am actually going to compare the stock price over time for Tractor Supply against it's called VOO, which is the Vanguard S&P 500 fund. So let me go ahead. I'm going to go into the full chart here. And I've already kind of checked into this before I started recording because I just wanted to prepare for videoing this. And I noticed that the ETF VOO, I think it's just called the S&P 500, but we'll see, has only been around since 2013. So in that case, I'm going to just compare it for 5 years. So this is Tractor Supply's stock price. It went down today. This is only for 1 day, so no biggie. But we're going to do it for 5 years. And then I am going to add a comparison to VOO. So I'll put that in here. And we've got a couple choices here. Value, I think they're all the same, really. It says Vanguard, S&P 500 value, S&P. We'll just pick this one because it's just the plain Jane one. I think it's the same one as the top one, but for some reason they stuck a value in there, which means that it's a value stock, which means that it's not it's the opposite of growth stock. There's growth and value. Growth is more like a small company that's investing most of their capital in that company. They don't really pay dividends. A value stock is basically a stock that's been around for a while and that doesn't have a high rate of return but is very consistent, and typically you can get it at a cheaper price. The value stock is what Warren Buffett tries to invest in. He is considered a value investor. He looks for bargain stock prices, which are stock prices that are kind of repressed. Not everybody's attracted to those stocks, or else the stock price would go way up. But he thinks they're a good value because they've got a good profit margin and they will be more consistent over time. So we're going to pick this here. Okay, as you can see, over a 5-year period, the stock price of VOO, the valuation of VOO has greatly outpaced the valuation of Tractor Supply. So if you're going by a sheer valuation alone, keep in mind this is historical. It does not necessarily reflect what's going to happen in the future, but if the future is based on past results, you'd probably be better off going with just an index fund like VOO over the long run. Now, there's some other things that you should consider as well. So, I mean, like I said, it is a stock. I'm a customer. I like Tractor Supply. If I could invest in the company and do moderately well, maybe I would do that, even though I'm not getting as great a return as I would by just investing in an index fund. So we're going to look at a couple other metrics here. Okay, metric 2 is the 5-year average return on invested capital of the stock. And I want to make sure that the 5-year average ROIC, which is return on invested capital, is at least 10%. So what I'm going to do is go to the operating performance tag. Like I said, I am a member here of Morningstar, so I think it's like $200 a year, and you get some of this information, although a lot of it is free. So you get like an analysis and some other information, but if you get a account with Morningstar and you don't want to pay for it, a lot of this information on the site is free. I like the site a lot. So anyways, for this metric 2 that I discovered, which is a 5-year average of return on capital investment over 10%, I will credit the information or where I got this metric from, and that is a book called Rule 1 Investing and Rule 1 Investing. Hold on for a moment. Let me get his information here. Phil Town. It's by Phil Town. Rule 1 Investing. Simple strategies for successful investing in only 15 minutes a week. Okay, just my thoughts on this book and Phil Town. It's a good book. Phil is a little bit of a smarmy salesperson type, and when you say anything that sounds too good to be true, like simple strategy for successful investing in only 15 minutes a week, it's not. It takes a long time to learn this stuff. So, maybe after you've been learning about it for a long time, then you can invest in only 15 minutes a week. But if it sounds too good to be true, it usually is. And that's kind of how I feel about, I hate to say it, I feel kind of that way about Phil Town. Although this book was really good, and this is a metric that I borrowed from him, so I'm giving him credit, and I look at a 5-year average return on capital investment of over 10%. And the definition of a return on invested capital, I keep saying return on capital investment. The return on invested capital is the amount of return a company makes above the average cost it pays for its debt and equity capital. So if you're looking at that, since 2014, Tractor Supply has been doing pretty well in that category. And it has an average for 5 years of 24.82% return on invested capital versus 13.84 for the index. Now this index, I'm not sure if that's the S&P 500 index or just the index for companies in Tractor Supply's circle or sector. I'm sorry. So that is something, yeah, I'm not really sure. It doesn't really give me that information in the Morningstar statistics here, but it looks like it's doing a lot better than the index. So that's a plus for Tractor Supply. Okay, I am back here. I have actually spliced 2 or 3 of these videos together, and what I'm finding out is that the video is getting long. So I am going to make a part 2 on this, and possibly a part 3, because it does take a while to go through all these statistics and metrics on evaluating a stock like Tractor Supply. I will continue to do this video or series, I guess, I did want to let you know that most of the other criteria that I have got for my stock evaluations, I have got through the philosophy of Warren Buffett, who is a value investor, and I try to focus mostly on value investing myself when I pick stocks. So um, Warren Buffett had credited 3 books for his investment philosophy, and I have them on a card here, so I'll just read them off. The 3 books that he credits are a book called Security Analysis by Benjamin Graham and David L. Dodd. And then he also credits The Intelligent Investor by Benjamin Graham and another book called The Wealth of Nations. And unfortunately, I did not write down the author of that. I should have, but I did not, so I don't have it handy here. But anyways, these are 3 books that he credits. I had looked for them at one point because I thought maybe I would be interested in reading them. But from what I've heard, and I haven't read the books personally, but from what I heard, you kind of have to have a big brain to digest these types of books. And I know that Warren Buffett has a big brain. I'm not sure if my brain is as big as Warren Buffett's. And sometimes when I read stuff like that, I have a little bit trouble with comprehension. So I did actually find, by Googling around, I found a book that digests these 3 books into a guide that's fairly easy to understand, especially if you're a beginner investor. And that is called Warren Buffett's 3 Favorite Books: A Guide to the Intelligent Investor, Securities Analysis, and The Wealth of Nations. And it's by a person named Preston Fish, I believe his name is. It's Pysh. And he and a business partner of his named Stig Broderson have a wonderful site called buffettsbooks.com. They have free investing courses on that site. I will give you a link of that. I'm not going to demonstrate the site. That's another video. That will be another, yeah, another video. I can do it on the computer and show you all these wonderful things on that site. But I will put a link down here, maybe as a little thing in the video and then maybe in the show notes. So stay tuned for that. Stay tuned for the rest of my metrics on Tractor Supply. Looking forward to talking to you more. And that's it for now. Stay inspired and think outside the dressage court, and time for me to sign off. Bye.